Good morning, good afternoon, dear colleagues, dear participants, dear friends. We can start now. Thank you very much for joining us for the first webinar on sustainability reporting. And the aim of this session today is to explain the key objectives, scope, and underlying principles of the ISSB standards, namely IFRS S1, general requirements for disclosures on sustainability-related financial information, and IFRS 2, IFRS S2, climate-related disclosures. This session will also explain the interoperability aspect, particularly with regard to European standards. This is very important subject to our participants in EU accession countries. My name is Svetlana Platon. I'm Senior Financial Management Specialist at the WorldBank Center for Financial and Sustainability Reporting Reform, and I will moderate the session today. But before we start, there are a few aspects that need your kind attention. Katerina, could you please move to next slide? Thank you. So first of all, please note that simultaneous interpretation is available today in Russian, Albanian, and Bosnian, Croatian, Serbian. To hear interpretation, you need to select your preferred language. Please press the globe icon at the bottom of your Zoom meeting window. Just in case you cannot see the globe icon, please press the 3 dots. And I hope you will see the globe icon and will be able to select your preferred language. In order to hear your language only and more clearly, please click mute original audio. Your microphones and cameras are automatically muted during the entire event. Still, you can use a Q&A box for your questions related to the content. But in case you have any questions or issues related to connection, or you cannot hear the interpretation, in this case, please use the chat and we'll try to respond your questions. During the presentation, we'll have several breaks for questions and answers, and the most relevant questions from Q&A box will be selected and answered live. In case your question is not answered, please note that it could be covered later in the presentation or in subsequent sessions in next week. Also, I would like to inform you that the event is being recorded, and the recording in all languages will be available on CFRR website, including presentation, after all sessions are delivered. And I hope we are ready to start now. And I invite Adrian Fossart, Practice Manager for the Institutions Department and at the Europe and Central Asia region, for opening remarks on behalf of the World Bank. Adrian, over to you now.
Okay, thanks, Svetlana. So good day to all our participants. I'm very impressed to see that we have over 300 people joining the call, the meeting at present. So good day, everybody. Thank you very much for joining from around the Europe and Central Asia region. On behalf of the World Bank Center for Financial and Sustainability Reporting, based in Vienna, Austria, I'm delighted to welcome you to this important webinar series on leveraging international sustainability standard boards standards to advance sustainability reporting. I'm particularly pleased that this series represents a collaboration between CFRR and the IFRS Foundation, bringing together our complementary expertise to support you on this journey. I'm grateful to our distinguished speakers and the ISSB board members for joining today. This webinar series is organized under CFRR's regional program Enhancing Accountability, Auditing and Sustainability Reporting Program, co-funded by the Austrian Federal Ministry of Finance, the Swiss State Secretariat for Economic Affairs, and the Austrian Development Corporation. As financial markets evolve, sustainability has moved from the periphery to the center of investment decisions and risk management. Financial sector regulators and industry associations in emerging markets face unique challenges in navigating this rapidly changing landscape. Sustainability also creates opportunities. This webinar seeks to help participants navigate this emerging agenda. Countries in the economic region with association agreements with the European Union will need to amend their accounting and auditing regulations to comply with and adopt European sustainability reporting standards. The proposed simplification of the Corporate Sustainability Reporting Directive under the Omnibus agenda will significantly increase these compliance burdens for companies with targeted exemptions and streamlined requirements. The exact thresholds and scope of relief remain subject to final legislative approval. It is important to note, however, that regardless of the size of the new thresholds, the EU accession countries must fully transpose the requirements into their legal framework, even if only a few companies fall under the scope. While ISRS will provide the sustainability reporting standard for most countries in the Europe, other stakeholders, professional bodies, regulators, and educational institutions can benefit from an enhanced understanding of the ISSB standards and the resources, educational materials, and tools that ISSB has made available to authorities and market participants. The relevance of enhancing understanding of ISSB standards is underscored by calls under the EU's ongoing simplification agenda to further strengthen interoperability of international sustainability reporting standards. Universities and professional accountancy organizations in the region will need to cover both frameworks, ESRS and ISSB standards in their curriculum. Some companies in the region are owned by non-EU-based companies. These companies may not fall under the scope of ESRS, but will need to report on their parent companies using ISSB standards. Conversely, the larger companies in ECA countries with cross-border activity or that have subsidiaries in jurisdictions outside the EU are likely to face reporting obligations in jurisdictions that have adopted ISSB standards. Understanding ISSB standards can help authorities in ECA countries support their domestic reporting entities required to observe third country reporting regulatory requirements. Understanding the similarities and interoperability aspects will help companies and their regulators better navigate the complexity of sustainability reporting and address the emerging opportunities for streamlining reporting in the move towards international alignment. We believe that these webinars will help stakeholders understand ISSB standards and better navigate interoperability aspects with ESRS. The webinar series will provide key stakeholders in the ECA region with a better understanding of the similarities between global standards and ESRS, and equip them with knowledge of the ISSB standards that can be applied within the reporting framework for corporate entities or for inclusion in university and professional development learning curricula. This will ultimately enhance sustainability reporting and the position CFRR partner countries favorably within the global financial landscape. Thank you. I'll now hand back to our moderator, Svetlana, to begin today's session.
Thank you, Adrian. Thank you so much. And And now I am pleased to introduce our distinguished speakers for today's webinar. Elizabeth Seeger is a member of the International Sustainability Standards Board and was appointed as a full-time member in 2022. Elizabeth has over 20 years of experience in standard setting, investment, and sustainability topics. And Rose Vainin. Rose is the head of strategic affairs for ISSB at the IFRS Foundation, and she oversees the development of the ISSB overarching strategy, manages high-level partnerships, and represents the ISSB in key international forums. Dear participants, we are truly honored to have Elizabeth presenting today. This is a great opportunity to hear directly from the source and gain first-hand insights into the development and implementation of the global sustainability disclosure standards. And we encourage everyone to take full advantage of this session to deepen understanding on global standards and to learn more on interoperability aspects, as this is very important and as mentioned before by Adrian. So over to you now, dear Elizabeth, for welcome remarks on behalf of ISSB and IFRS Foundation, and to start your presentation. Thank you.
And thank you very much, Svetlana, and good afternoon to everyone joining us today. It is my sincere pleasure to participate in this important series of webinars on leveraging ISSB standards to advance sustainability reporting. But I want to begin by expressing our collective gratitude to the World Bank Center for Financial and Sustainability Reporting Reform for hosting this initiative. And we're deeply appreciative for the leadership of the World Bank, the Austrian Ministry of Finance, the Swiss State Secretariat for Economic Affairs, and the Austrian Development Agency in making programs like this possible. And I'd like to extend special recognition to Adrian, Svetlana, Andre, Arun, and the entire CFRR team for their dedication to making this event a success. And a particular thanks goes to you, Svetlana, for your leadership in organizing and bringing this program together. Thank you so much for that. In my view, the work that we're discussing today, which is advancing sustainability reporting through the IFRS sustainability standards, is really more critical than ever, and I hope you'll agree by the time we're done with this conversation. These standards represent a significant step forward in creating a global baseline for sustainability-related financial disclosures that will help investors, companies, and other stakeholders make informed decisions, while also, importantly, reducing the cost and complexity that we are all dealing with. As you heard, I hope, we have a 4-session series planned for you. Today is an introductory session on the ISSB standards that Rose and I will split. The second session is on the industry standards that we own and enhance. The third session will focus on regulatory adoption, and the last session on financed emissions. And so we have a very comprehensive presentation ahead of us today, so I will get straight to the content in a moment. As Svetlana mentioned, we will stop for questions, but please do enter them into the Q&A throughout the discussion. We will be monitoring this. So I want to thank you in advance for your questions and insights throughout the series. If you turn to the next page, in this session, Rose and I will take turns presenting content. Together, we will introduce you to the IFRS sustainability standards and describe the key aspects of IFRS S1 and S2. And I will conclude with our next steps, as well as some tips on how companies can prepare. If you could turn to the next slide, please. I'm not seeing it. Great. This is just the agenda that I'm covering here. We will go through each of IFRS S1 and S2. And then we will conclude with our next steps, as well as some tips on how you all can prepare. If you turn to the next page, please. Just as a reminder for those of you who or new information for those of you who are not aware, the ISSB was created to solve for a particular global capital markets need. Investors need and want decision-useful, consistent, and comparable information that enables them to understand sustainability-related risks and opportunities. And this information has been provided to some extent for many years now, but not in a consistent or high-quality manner. At the same time, companies were overwhelmed with competing and overlapping demands and also confused by all of the existing standards and frameworks. And this confusion adds cost and complexity for companies and also for the capital markets that rely on robust and high quality information to function efficiently. Meanwhile, at the same time, financial regulators around the world were considering introducing sustainability-related disclosure requirements into their markets, and there was a concern that all the voluntary reporting fragmentation could turn into regulatory reporting fragmentation and complexity. If you turn to the next page. And so the ISSB was created as one of the two standards boards within the IFRS Foundation. And through its creation, the ISSB simplified the reporting landscape, which is one of our key objectives. The creation of the ISSB involved the consolidation of the Climate Disclosure Standards Board, CDSB, the Sustainability Accounting Standards Board, SASB, and the International Integrated Reporting Council, IIRC. Additionally, and we will talk about this later, IFRS S1 and IFRS S2 fully incorporate the recommendations of the TCFD and build on the materials from the Integrated Reporting Framework, SASB Standards, and the CDSB guidance. And because of these foundations, those companies and investors that have previously used these materials are well positioned to start applying the ISSB standards. Turn to the next page, please. I am one of 14 full-time members of the ISSB. The ISSB members bring diverse experiences as well as global perspectives with representatives from regions around the world and a wide range of relevant perspectives, including from the preparer, investor, academic, and standard setter perspectives. This means that the board is equipped to understand the perspectives of affected stakeholders in setting high-quality standards that balance the needs and considerations of those preparing the information, as well as those using the information. You turn to the next page, please. In my prior role, I had the opportunity to be both an investor and a preparer, as I saw the public sustainability-related disclosure that my own organization did. Importantly, while not pictured on either of these two slides, the work of the ISSB is driven by or supported by a wonderful staff who provide recommendations and lead engagements such as ours with the World Bank. And I do want to note that we do have our colleague Aurora on the line as well, who may be answering some of your questions that you put in the chat. If you go to the next page, here's what you'll see that we are all focused on. We are all focused on achieving this outcome that you see here, that is developing and maintaining standards that elicit decision-useful information to meet the needs of investors, while doing it in a way that is cost-effective for preparers around the world. Turn to the next page, please. We've been working really hard to achieve this. This is the first page of our milestones. As you can see, we were created in late 2021, and about 18 months later, in June of 2023, published IFRS S1 and S2. Shortly after that, IOSCO, or the International Organizations of Securities Commissioners, endorsed our standards, and the Financial Stability Board retired their work on the TCFD, the Task Force on Climate-Related Financial Disclosure, and handed their ongoing monitoring work to the ISSB. In the meantime, recognizing the importance of capacity building around the world, we launched our capacity building efforts, including a network of partners with which we work to support these efforts. Our work right here with the World Bank, such as, in this session, is part of our effort to support capital markets participants as they all and we all learn this global language. Turn to the next page, please. In this past year and a half, we've been equally busy. For example, in mid-2024, we announced our 2-year work plan with our focus areas and projects. And very recently, we announced our jurisdictional profiles to provide transparency to the global capital markets on the jurisdictional adoption progress. And I will talk about both of these points, starting with our 2-year work plan. If you turn to the next page. This shows our priorities that we have identified for 2025 and 2026. Very important to note is that our number one priority is supporting the implementation of the standards around the world, including, for example, this webinar, which is an important part of this. The second area of focus that you see here is adoption, whether it's voluntary or mandatory, which I will discuss shortly in the context of jurisdictional adoption. And finally, our work on the standards, which includes 2 research projects that we have underway, and our work to enhance the industry-based SASB standards. And I will talk a little bit more about both of these later in the session. Turn to the next page. Let me shift to talking about jurisdictional adoption, which is such an important part of the work that we do at the Foundation. It's important to note first that, as I mentioned, IOSCO, the International Organizations of Securities Commission, endorsed the ISSB standards following its comprehensive review of the standards shortly after the standards were published. IOSCO's endorsement sends a very strong signal to jurisdictions around the world that the ISSB standards are fit for purpose for capital markets use, facilitating enhanced data collection and analysis, and also enabling pricing of sustainability-related risks and opportunities. In this endorsement, IOSCO called on its 130 member jurisdictions, which are capital markets authorities that regulate more than 95% of the world's securities markets, to consider how they can incorporate the ISSB standards into their regulatory frameworks to deliver consistency and comparability of sustainability-related disclosures worldwide. And that really helped set the stage for the momentum that we are now seeing around the world. If you turn to the next page, you'll see that this momentum is in fact happening around the world, with 36 jurisdictions having finalized or in the process of adopting or otherwise using the standards in their markets. And you can see that here. And in fact, this is a significant portion of the global capital markets. If you turn to the next slide, you'll see that about 57, almost 60% of global GDP, 40% of market capitalization, and 50% of global greenhouse gas emissions are represented by those 36 different jurisdictions. And I'll note that this does not include the US state of California, though their climate risk disclosure law does recognize the ISSB reporting as satisfying their requirements, but that's not included in our count of jurisdictions. Turn to the next page. With all of these moving pieces, it can be very difficult to understand what each jurisdiction is doing. Last month, not too long ago, we published jurisdictional profiles and snapshots to provide clarity for capital markets participants on different jurisdictions' approaches toward the adoption or other use of the ISSB standards. And through the jurisdictional profiles, anyone, including you all, can understand how the ISSB standards are being incorporated into jurisdictional frameworks around the world. They can also assist jurisdictions and market participants interested in learning from the experience of other jurisdictions in their adoption or other use of the ISSB standards. If you turn to the next page, for those of you who are interested, we published an initial set of 17 jurisdictional profiles. Of the 17 jurisdictions profiled, 14 have set a target of fully adopting ISSB standards. 2 have set a target of adopting the climate requirements of ISSB standards, and 1 targets partially incorporating ISSB standards. In addition, we published 16 jurisdictional snapshots, which are of jurisdictions that are still in progress and subject to finalization. Of the 16 snapshots that we published, 12 propose or have published standards or requirements that are fully aligned with ISSB standards, such as Canada, or designed to deliver outcomes functionally aligned with those resulting from the application of the ISSB standards, such as Japan. 3 proposed standards or requirements that incorporate a significant portion of the disclosures required by the ISSB standards, and 1 is considering permitting the use of the ISSB standards. For these jurisdictions, their target approach to adoption is yet to be finalized. That's why they're snapshots. Once the jurisdictions have finalized their decisions on adoption or other use of the ISSB standards, we intend to publish a profile for each of these jurisdictions. Just very quickly on the next page, and then I will hand it over to Rose to talk a little bit about Europe. I just want to finish by saying the jurisdictional profiles provide significant information on each jurisdiction's target approach, which is what the jurisdiction aims to achieve, as well as the current approach, which is the most up-to-date information available at the time of publication. This analysis is based on the 7 descriptions laid out in section 3.4 of our jurisdictional guide, ranging from the permitting of the use of the ISSB standards to fully adopting. And with that, I will turn it over to you, Rose, to take it on to the next page.
Thanks, Elizabeth. So the ISSB standards were designed to deliver a global baseline of disclosures that jurisdictions can add additional building blocks to tailor to the information and needs of those jurisdictions that what they deem necessary to add on. So the European Commission, so if we spotlight on the EU for a minute, the European Commission had already embarked on developing the European Sustainability Disclosure Standards, also known as the ESRS, before the ISSB was established. So in recognition of the need for comparability internationally, the ISSB, EFRAG, and the European Commission, and EFRAG being Europe's standard-setting body, we work together to first deliver a high degree of alignment of climate-related disclosure requirements, and second, to provide practical support that explains how companies can efficiently comply with both sets of standards through an interoperability guidance. Now, if you move to the next slide, with regard to this first point, so the European Commission, EFRAG, and the ISSB work jointly to improve the interoperability of our respective climate-related disclosure requirements in the overlapping climate disclosure standards. This work successfully led to a very high degree of alignment, reduced complexity, and duplication for entities wishing to apply both the ISSB standards and the ESRS. The work undertaken on interoperability enables an entity to efficiently apply both sets of climate-related standards with minimized duplication of effort. If you turn to the next slide, on the second point, in May 2024, the IFRS Foundation and EFRAG published an interoperability guidance designed to reduce complexity, fragmentation, and duplication for companies applying both the ISSB standards and the ESRS. Companies will still need to use both sets of standards, but the guidance makes it easier for them to navigate doing so through 2 main things. One is by describing the alignment of general requirements, including on key concepts, which we'll get back to around materiality, presentation, and disclosures for sustainability topics other than climate. And 2, providing information about the alignment of climate disclosures and what a company starting with either sets of standards needs to know to enable compliance with both sets of standards. I would note, however, that the EU is currently advancing an omnibus process of simplification of the first set of ESRS, which will indeed impact ESRS's interoperability with the ISSB standards and which the ISSB is currently engaging with. Now, if you turn to the next slide, maybe just to take a step back for a moment and say that beyond EFRAG and other stakeholders that are jurisdictional stakeholders, the ISSB is also pursuing a number of strategic relationships with other organizations in the sustainability disclosure landscape, which you can see on this slide. And the aim here is really to help making this landscape look simpler for preparers, for investors, and for all other market participants. For example, the ISSB is notably collaborating with the Global Reporting Initiative, GRI, to deliver full interoperability between GRI and ISSB standards, which aims to enable seamless sustainability reporting. If you turn to the next slide, I think it's maybe a pause for any questions which might have come about.
Yeah, thank you very much, Rose and Elizabeth, for this interesting information. And I propose we stay a little bit on interoperability agenda, since this aspect is very important for our participants in Western Balkan region as well in US session countries. And could you please elaborate from your perspective, of course, on how IFRAG recent report on ISRS simplification may impact the alignment and practical interoperability between European sustainability reporting standards and ISSB standards? Because given that the simplification aims to reduce reporting burden by while still maintain compatibility with global framework. How do you see this influencing the ability of regulators or companies to navigate dual compliance or transition between two sets of standards? You mentioned before, Rose, that some companies may be under the scope of two sets of standards. So
Sure.
could you elaborate from this simplification EU agenda?
I'd be happy to, and Elizabeth, I'm happy to take this question. So in its announcement, maybe if we just take a step back for all participants to this webinar, in its announcement about the revisions to simplify the ESRS in the what is known as the Omnibus Simplification Package of February 2025, the European Commission emphasized that this simplification would be conducted, and here I quote, without undermining interoperability with global reporting standards, and also the Commission emphasized the opportunity to, quote, further enhance the already very high degree of interoperability with global sustainability reporting standards, including the ISSB standards. So we think, and I think the European Commission also thinks, that there are significant benefits to preserve and also indeed further enhance the alignment between the ESRS and the ISSB standards, because notably a significant portion of the companies included within the proposed rescoping of the CSRD will be subject to reporting requirements in jurisdictions outside the EU. And as Elizabeth noted earlier, given the adoption momentum of the ISSB standards, they will likely face reporting requirements in other jurisdictions than the EU. So what the ISSB has done is that the ISSB is working with EFRAG to support the enhancement of interoperability at the technical level, which we hope should ultimately reduce complexity for preparers. And this means in practice looking to align definitions further, looking to align requirements further on those disclosure requirements that fall within the perimeter or the scope of the ISSB standards. And we know that the EU has somewhat of a broader focus than the ISSB standards. In addition, and this may be of interest to some participants, for third country companies, given the vast majority will be using the ISSB standards, they will have been mandated to do so in their reporting jurisdictions. An efficient solution, we think, for compliance for third country companies that need to comply with the CSRD, because they have, for example, an EU subsidiary or do a certain amount of business in the EU, could be to have an alternative compliance mechanism of ISSB, plus perhaps adding on specific elements, specific impact disclosures in the ESRS, or specific elements from GRI standards, which we are aligning as well, to equal CSRD compliance. And we are also in dialogue with relevant EU stakeholders about this solution, because the aim here is really to reduce the burden on preparers, but also to ensure that investors get the decision useful information that they need.
Thank you very much, Rose. This seems to be very promising, as at the end of the day, it should help regulators and companies to navigate this complex sustainability reporting reform. I think we can move forward now.
Sure. So I'm going to take you, if we take on to the next slide, if we move to the next slide, we're now going to go and turn to a high level overview of the content of the ISSB standards. So if you turn to the next slide. So IFRS S1 and S2 were the first ISSB standards published in June 2023 following consultation process and ISSB redeliberations, and that of course included Elizabeth Seeger. S1 sets the foundations covering all sustainability-related risks and opportunities, while S2 provides more detailed requirements on the risks and opportunities related to climate. Both standards require disclosure of information material to investors in capital markets, and we will come back to this shortly. And they require cross-industry and industry-specific information, and we will also come back to this. If you turn to the next slide, if we pause for a moment on the core content areas of both standards, S1 and S2 require a company to disclose information about its governance, strategy, and risk management, as well as its metrics and targets in relation to its sustainability-related risks and opportunities. These 4 core content areas reflect how companies manage those risks and opportunities. Specifically, S1, which I'm going to focus on in this section before Elizabeth turns to S2, requires the following information on core content areas: requirements linked to governance, requirements linked to strategy, requirements linked to risk management, and metric and targets. And those 4 core content areas. Yeah.
Rose, I'm sorry for interrupting you. Our interpreters are asking to speak a
Slow
little
down.
bit slow.
Sure,
Yeah.
happy to.
Thank you
Happy
so
to.
much.
And so the 4 core content areas are consistent with, and they build on the TCFD recommendations. So they extend the structure of the recommendations to sustainability-related risks and opportunities beyond climate. So this is the focus of S1. Now, if we turn to IFRS S1 in the next slide, please. This is our overarching and foundational standard. So it's also known as IFRS S1 General Requirements for Disclosure of Sustainability-Related Financial Information. So I'll point out a few elements about S1 that we think are particularly relevant, but please note that there are many other materials available to you on the IFRS Foundation website. So please do go and look at the IFRS Foundation website to see those supporting materials when thinking about S1. So if I think about S1 at a very high level, first, S1 sets out the overarching requirements for a company to disclose information about its sustainability-related risks and opportunities that is useful to investors in making decisions related to providing resources to the company. So to make sure it's connected and can be considered alongside the financial statements, the information is disclosed as part of a company's general purpose financial report, and we'll also come back to this. S1 also sets out general requirements for the content and also the presentation of information, including the core content for a complete set of sustainability-related financial disclosures. And in addition, S1 requires industry-specific disclosures, so that companies can focus on reporting that better describes their business. And for matters other than climate, S1 refers to different sources to help companies identify sustainability-related risks and opportunities and information. For example, the SASB Standards. And we'll also briefly touch on this slightly later. Now, if we move on to the next slide, more specifically, you might be wondering, what are the different content areas of IFRS S1? So IFRS S1 has 6 sections, which you can see on this slide. The overall objective of the standard, the scope of the standard and the ISSB standards at large, some of the conceptual foundations of sustainability-related financial information, which includes the requirements on materiality and the requirements on connected information, the core content disclosure requirements, which I mentioned earlier, related to governance, related to strategy, related to risk management, and to metrics and targets, and the general requirements, including location of disclosure, timing of reporting, and statement of compliance. And finally, the 6th area is the requirements related to judgments, uncertainties, and errors. And we'll go through some of these in a bit more detail right now. If you turn to the next slide, if you turn to the first area in terms of objective, so just to repeat and make sure we're all clear on this, S1 sets out really the overarching requirement for a company to disclose information about its sustainability-related risks and opportunities to meet the information needs of investors. So when we talk about these sustainability-related risks and opportunities, we aren't talking about each and every risk and opportunity that an entity could be affected by. Rather, S1 specifically asks for information on those risks and opportunities that investors would be interested in, which S1 describes as information about all sustainability-related risks and opportunities that could be reasonably expected, to affect a company's cash flows, its access to finance, or cost of capital over the short, medium, or long term, which in the shorthand is the company's prospects. If you turn to the next slide, S1 also sets some of the conceptual foundations to support companies in reporting according to the ISSB standards. One important function of S1 is to set out the parameters for the type of information that needs to be provided in order to be decision useful for investors, which is the main aim. Specifically, the fair presentation requirements of S1, which are consistent with those of IFRS accounting standards, require a company to disclose relevant information about its sustainability-related risks and opportunities and to faithfully represent, so provide a complete, neutral, and accurate depiction of those risks and opportunities. Now, if you turn to the next slide, as we covered previously, a company will need to identify the sustainability-related risks and opportunities on which to provide information on. So those risks and opportunities that could be, as I mentioned earlier, reasonably be expected to affect an entity's prospects. Now, the information provided by a company on those risks and opportunities is that which meets the decision-making needs of investors. So specifically, IFRS S1 requires the disclosure of material information, and I think I would really emphasize the term material information about sustainability-related risks and opportunities that could reasonably be expected to affect an entity's prospect. The definition of material information is one that you might have come across already, because the definition of material information used in S1 is based on and aligned with the definition found in IFRS accounting standards. It is that information, if omitted, misstated, or obscured by other information, could reasonably be expected to influence investor decision. In other words, the ISSB standards seek to elicit disclosures from companies to enable the communication of key information that really matters to investors. And so if you better want to understand this and this concept, the Foundation published a guide to help companies identify those sustainability-related risks and opportunities and material information to provide. So this is a material that really supports the implementation of IFRS S1 in November 2024. And I would really encourage you to look to this document that was published in November 2024. If we turn to the next slide on connected information. So S1 requires a company to provide information that enables investors to understand connections, including, and here I'll focus on three things. First is connections between the various sustainability-related risks and opportunities. Two, the connections with sustainability-related financial disclosures, such as connections between core content disclosure requirements on governance, strategy, risk management, and metrics and targets. And third, connections across the sustainability-related financial disclosures and other parts of the company's general purpose financial reports, including the financial statements. So to facilitate the understanding of such connections, S1 also requires that sustainability-related financial disclosures are prepared for the same reporting entity and for the same reporting period as the related financial statements, and this is very important. Secondly, also provided at the same time as the financial statements and as part of the company's general purpose financial reports, which also include the financial statements, and I'll come back to this very shortly. And S1 also requires a company to use data and assumptions in preparing its sustainability-related financial disclosures that are consistent to the extent possible with the corresponding data and assumption used in preparing its related financial statements. When there are significant differences between the data and assumption used, a company would really be required to disclose information on this. If I turn to the next slide and focus on the general requirements for a second, I won't go over all of them. right now, but I will just say on the point, because some of them we have already covered and we will cover further just after, but just to focus for a moment on the statement of compliance. So a company that complies with all requirements in the ISSB standards is required to make an explicit and unreserved statement of compliance. So a company is able to assert compliance only if it meets all of the requirements of the ISSB standards and not just a portion. S1 relieves a company from disclosing information otherwise required by an ISSB standard if law or regulation prohibits the company from disclosing that information. The standard also relieves a company from disclosing information about a sustainability-related opportunity if that information is commercially sensitive. Now, if we turn to the next slide, in terms of, you'll have seen on the previous slide that the first point was around sources of guidance. So the S1 asks companies, as I mentioned, to provide material information on all sustainability related risks and opportunities that could reasonably be expected to affect a company's prospects. S2 specifically sets out the requirements for climate-related disclosures, and Elizabeth will be able to give you a bit more detail around that. So you might be asking yourself, what about the risks and opportunities other than those related to climate? And there are a number of them. S1, in those cases, directs companies to different sources of guidance to support the identification of risks and opportunities and information to disclose about those risks and opportunities. So first, in the first step, when identifying which sustainability-related risks and opportunities to report on beyond climate, S1 says that consideration must be given to the SASB standards. In addition, companies may consider other materials. Specifically, the S1 cites the CDSB framework application for water and biodiversity related disclosures, industry practice, and materials of other investor-focused standards second. Then, in the second step, after a company has identified the sustainability-related risks and opportunities to provide information about beyond climate, which once again is covered in S2, S1 supports companies in identifying the information to disclose. Here, S1 says again that a company must consider the SASB standards, and in the standards it shall consider the SASB standards. In addition, a company may consider, to the extent that it meets investors' information needs, the aforementioned CDSB guidance, industry practice, but also materials of other investor-focused standard setters, as well as, and here you'll recognize some familiar acronyms, the GRI standards and the ESRS. So in summary, S1 provides guidance from day one to facilitate reporting on all sustainability-related risks and opportunities that matter to investors. If you turn to the next slide. Now, you might be wondering, you might be thinking, this sounds like a lot, and we understand that and hear you. And that's why in the standards, the ISSB has sought to achieve a balance between the costs for companies in applying the requirements and ensuring investors are provided with consistent, comparable, and verifiable information, which is why the ISSB was set up in the first instance, as Elizabeth mentioned. Where possible, the ISSB used terminology, used concepts that should be familiar to preparers. For example, the ISSB designed many of the requirements in S1 and S2 to be applied in a manner that is appropriate for a company's circumstances. So that is that the requirements are proportionate to the range of capabilities and preparedness of companies around the world. The standards also include guidance to help companies understand how to apply the standards and refers to sources of guidance to assist companies in reporting on topics beyond climate, as I've just mentioned. The standards also allow for temporary or permanent reliefs from some of the requirements, and I'll dive into that a little bit further. And for example, a company might provide qualitative rather than quantitative information about the anticipated financial effects of a sustainability-related risk or opportunity if the company does not have the skills, capabilities, or resources to provide quantitative information. Now, if we turn to the next slide, this slide outlines some of the proportionality mechanisms that are built into the ISSB standards, and you can find further details about them in a webcast and a fact sheet that the ISSB published just earlier this year in January 2025, and ISSB member Ndidi and Nolia Dozian, along with an ISSB technical staff member, really go and walk through the different proportionality mechanisms that are built into the standards. If you turn to the next slide, to just zoom in a little bit on reliefs for the first year of application. So the ISSB will provide, to help companies get ready to report using S1 and S2, the ISSB provides reliefs for the first year of application. And I won't go through all of them, but these include, for example, that companies can limit disclosures to climate-related risks and opportunities and begin reporting on their other sustainability-related risks and opportunities in the second year they apply IFRS S1 and S2. It also includes that companies can provide annual sustainability-related financial disclosures with their next half-year reporting rather than at the same time as the financial statements. And for example, there are other specific first-year reliefs related to our IFRS S2 requirements around Scope 3 and around application of the GHG protocol. These reliefs are designed to enable companies time and to enable companies to have time to put in place reporting practices and structures to provide high-quality, decision-useful information. Now that we've spoken about these different mechanisms, if I turn to the next slide, and I'm just going to come back to some of the requirements that I mentioned earlier on at a very high level and just deep dive into them for a couple of minutes. These relate to timing, location, and comparatives. So the information that is provided using S1 is information that is material for investors when they make decisions. It is also important that the linkages in the information in the financial statements and in the sustainability reporting can be understood. For this reason, S1 requires that the sustainability-related financial disclosures are published at the same time as the financial statements, and for the same reporting period as the financial statements. And so in doing so, providing sustainability-related financial information to investors on a timely basis. However, the ISSB is aware that getting ready for this reporting is something companies may need to prepare of. And that's why we have this relief, which I mentioned earlier, in that S1 allows a company to provide its first annual sustainability-related financial disclosure using the standards to be provided along with its next half-year financial report. The reporting provided using the ISSB standards has to accompany the financial statements and be part of the same reporting package, which we refer to as part of a company's general purpose financial report. But S1, crucially, does not dictate where in that reporting package the information is provided. This is really important, given that the standards are designed to be used around the world and thus facilitates jurisdiction-specific requirements on the location of reporting. So a company may provide additional information on sustainability-related matters beyond what is required by the ISSB, but only if that additional information does not obscure material information required by the ISSB standards. Finally, companies are required to disclose comparative information for all amounts disclosed in the current reporting period, unless another ISSB standards permits or requires otherwise, consistent with financial reporting. However, comparative information need not be provided in the first year a company applies the standards. If I turn to the next slide, if I zoom in for a minute on general purpose financial reports, which I mentioned just before, the information provided through application of the ISSB standards is designed to complement information in the financial statements being provided as part of the same reporting package. Financial statements, as you all know, provide the targeted information that is really necessary to inform investment decisions and that is robust and comparable so that investors can be confident relying on it when they allocate capital. The ISSB standards are designed to ensure that information about sustainability shares these characteristics. And that's why it's so important that the ISSB as part of the IFRS Foundation. To ensure that ISSB standards can be used anywhere in the world, they can be applied with any GAAP. If you turn to the next slide, you might be wondering, you might be deciding to apply the standards. You might not be required to do so, but you might want to do so. And this slide just is a reminder that when thinking about applying the standards, the terminology used should be applying ISSB standards rather than aligning or adopt. And to actually, to facilitate that, if you turn to the next slide, the ISSB published in September 2024 a guide that outlines considerations for preparers when communicating partial voluntary application. One of the key items to note is, as I mentioned previously, but emphasizing this again, that compliance with ISSB standards means meeting all of the requirements in S1 and S2. In addition, voluntary reporters might phase in application of ISSB standards at their own pace, but they should explain in their disclosures how and to what degree they applied ISSB standards. And this is very important for transparency purposes. To finish, and this is normally my last slide, if you can move to the next slide. This is just an overview of some of the main things to keep in mind when you're preparing, if you choose to do so, or if you're required to do so, your sustainability-related financial disclosures as per S1. There's a number of questions you can ask related to the information, related to investors and whether they'll be able to understand connections between sustainability-related risks and opportunities, disclosures on core contents, sustainability-related financial disclosures and financial statements, and then a number of other questions around statement of compliance, around disclosure of material information, and comparatives. So Elizabeth, I think, will next provide an overview of IFRS S2 requirements, but I think if you turn to the next slide, we now have time for a few questions, if there are any, and we'll do our best to respond to them, but I will note again that there are lots and lots and lots of supporting materials on the IFRS Foundation website, which will really enable a more comprehensive understanding.
Thank you very much, Rose. Indeed, this is very interesting and informative. And let me ask our participants to not hesitate to ask questions. Please use Q&A box if you have any questions related to the content of the presentation. As you can see, this Q&A box is being monitored and some questions are answered online. Before we move to the next part, Elizabeth and Rose, let me bring the SMEs dimension to our discussion. Rose mentioned about a partial application of standards, but while it is widely believed that the largest companies should be subject of mandatory sustainability reporting requirements, still smaller companies also have an important role to play. And from your perspective, how can smaller companies with limited resources ensure that their sustainability disclosures still meet the requirements and ISSB's expectations and for connected and comparable information? This is especially important for SMEs, which often face capacity constraints and may lack dedicated sustainability sustainability teams, professionals within taking into account their capacity constraints. So your opinion on this?
Yeah, let me go ahead and start, Svetlana, to answer that question, and then we'll allow Rose to edit or add to anything that I said. And yeah, you're right that regardless of what happens from a mandatory perspective, smaller organizations around the world are going to be affected by the application of the standards by larger companies, including those that are their customers or otherwise in their value chain. And also smaller companies might be interested in disclosing information to their investors voluntarily as well. And I think ultimately the decision on which entities in a market will be subject to mandatory reporting does depend on each jurisdiction's decisions on who they're going to impose the standards on. But ultimately, even still, as I mentioned, smaller companies may be affected. And I would say that when we were developing the standards, we very carefully took into account the fact that we wanted to develop this truly global baseline that was able to be flexible to meet the needs and resources and capabilities of companies of different phases of maturity and of different sizes. And so, as Rose mentioned, we do have the proportionality mechanisms in there. I do recommend, I did drop into the chat, the webcast that goes through each of them that includes different ways that companies can think about their own resources and capabilities and how the standards might work for them. That said, the very smallest companies may still not find that the standards are exactly right for them at this time, but certainly can start working on adopting or applying pieces of it as well. Hopefully that helps.
And maybe actually, Elizabeth, just to add
Yeah.
one thing to what you said, I fully aligned with what you said. I think I just also want to remind the audience that jurisdictions adopting or otherwise using ISSB standards, as Elizabeth mentioned, decide which entities should apply the standards. And a jurisdiction that is described as fully adopting ISSB standard is one which, in terms of scope of the requirements, has introduced a legislative or regulatory requirements for all or most domestically publicly accountable entities to apply IFRS S1 and S2. These publicly accountable entities do not include other entities such as private entities and entities without public accountability that are often referred to as SMEs, although of course there are listed SMEs, but for example, when I think about Europe, that doesn't cover many of the SMEs. So maybe that's just a good, helpful reminder around what a jurisdiction fully adopting the ISSB standard, is described as.
Thank you very much. There is one more question about interoperability and one unified set of sustainability reporting standards, but perhaps we can revert to this at the end of the presentation to elaborate a little bit on interoperability aspects. And now we can move to the next part. Thank you.
Great, thanks, Svetlana. And we'll go ahead and move on to a description of S2. And some of this I'm going to go over pretty quickly because there is another session on particularly financed emissions planned for this webinar series. But if you go to the next page, please. And actually the next page also. Thank you. So IFRS S2 is our thematic climate-related standard. We created S2 because when we were setting up the ISSB, market participants told us that information about climate-related risks and opportunities was urgent, and also that current disclosures were not addressing the needs of the market. And I'm going to point out a few things about S2 that I think are particularly relevant. But please note, as we've mentioned a few times, that there are numerous other materials available to you. And in case we don't get to it, there will be a number of slides in this presentation in the next section about educational materials that you will be able to access after this event. So very first about S2 at a high level. The first is that, as you can see here, it fully incorporates the recommendations of the Task Force on Climate-Related Financial Disclosures, or TCFD. This means that it is not just about data points, but it is expected to provide additional context. Also, this should be very familiar to the many companies and regulators that have already used the TCFD framework. The second thing I'll highlight is that S2 climate-related disclosure requirements build on the requirements described in S1, as Rose mentioned. In other words, these are not two separate standards, but a set of standards that work together. And I'll talk more about that as well. The third is that it focuses on material information about climate-related risks and opportunities. So climate-related risks include both physical risks, such as those resulting from increased severity of extreme weather, and transition risks, such as those associated with policy action and changes in technology that can affect how a company may run its business. And climate-related opportunities refers to the potential positive effects arising from climate change for a company. And then finally, it, like all of our standards, requires the disclosure of both cross-industry and industry-specific information about climate-related risks and opportunities. You turn to the next page. S2 was written to enable investors to get the information that they need to determine the effects of climate-related risks and opportunities on a company's performance and prospects, understand a company's response to and strategy for managing its climate-related risks and opportunities, including its climate-related transition planning to the extent that there is any, evaluate the ability of a company to adapt its planning, business model, and operations to climate-related risks and opportunities, and also understand climate-related risks and opportunities in a company's value chain. Turn to the next page. As I mentioned, S2 is required to be used with S1. This is because S1 sets out the way that companies should approach reporting. In other words, what I call the discipline of accounting. For example, S1 establishes the key concepts, such as the need for connected information and how to think about the value chain. It provides important guidance on the assessment of materiality to be used when applying S2, which determines which particular disclosures a company needs to apply given its own circumstances. It sets out the qualitative characteristics of the information that has to be provided. For example, that information needs to be relevant and representationally faithful, as Rose mentioned and said better than I did. And it sets out the requirements for the reporting that has to be provided. And I won't repeat more in terms of what Rose has already covered. But IFRS also explains how to deal with things like changes in estimates and errors, and provides relief from providing commercially sensitive information about opportunities and when to disaggregate or aggregate information. So for any of those aspects of reporting about climate, an entity needs to use IFRS S1. And in fact, we recently released a guide that highlights specifically the portions of S1 that are critical when taking a climate-first reporting approach. To the extent this applies to any of your situations, I do recommend using that guide to support your work. So if you turn to the next slide, please. Also, as I mentioned, S2, like our other standards, borrows heavily from the structure of the TCFD framework. And to support reporters who are familiar with the TCFD, we did conduct an analysis of the differences between the two. And this is also available as a resource for you and companies that are seeking to make the change from one to another. As you can see, the areas are broadly consistent. So a company using the ISSB standards is basically fully aligned with the recommendations of the TCFD. However, S2 does add some important innovations, including the industry-specific requirements and information about opportunities, not just risk. So in the coming slides, I'm going to do a bit of a deeper dive to highlight into S2 to highlight some key aspects. And in the interest of time, I may shorten some aspects, but I want to assure you that there are many more resources that address this content that are freely available to you. You turn to the next page, please. So first, some of the key requirements of S2 are found within the sections of strategy and metrics and targets. And these are strategy and decision-making, including any transition plan a company may have, current and anticipated effects of climate-related risks and opportunities on a company's financial performance, financial position, and cash flows, assessment of climate resilience, including using climate-related scenarios, disclosure of a company's scopes 1 through 3 greenhouse gas emissions and associated guidance to help with the measurement and disclosure of this, and industry-based metrics that are associated with common business models and activities in a particular industry. Oh, and I should add, any climate-related targets the company has set or is required to set by law or regulation. And I am going to speak more about all of these areas. And as I do, if any of it seems overwhelming, I do encourage you to listen to our webinar series on proportionality mechanisms that I posted in the chat earlier. And these are built into the ISSB standards that to enable companies, as I mentioned, to start applying these standards from whatever position they are in. If you turn to the next slide, I'll start with first in strategy and decision-making. Climate-related risks and opportunities can affect how a company sets its strategy and makes decisions. And to help investors understand the effects of climate-related risks and opportunities on a company's strategy and decision-making, the company is required to disclose information about the following. First, as shown here, how a company has responded to and plans to respond to climate-related risks and opportunities, including how its business model is changing or is expected to change, direct and indirect adaptation or mitigation efforts it is doing or planning to do, any plans it has to transition to lower carbon economy, and how it plans to achieve its climate-related targets. Second, and furthermore, a company is required to disclose information about how it's currently resourcing or plans to resource its response to climate-related risks and opportunities. And finally, any progress against previously reported plans. Turn to the next slide, please. I think one really important innovation of the IFRS sustainability standards is their focus on connectivity between sustainability-related information and financial information. And IFRS S2 requires a company to identify how climate-related risks and opportunities have affected its financial position, financial performance, and cash flows for the reporting period. For example, a company might disclose how an asset impairment was affected by its strategy for managing a transition risk. Or a company could identify how an investment in new technologies reflected in the statement of financial position is related to its strategy to pursue a climate-related opportunity. A company is also required to explain the anticipated effects of climate-related risks and opportunities on a company's financial position, financial performance, and cash flows over the short, medium, and long term. For example, a company could disclose the anticipated financial effects of its transition to a lower carbon economy, such as increased revenue from products and services, or anticipated costs arising from anticipated physical damage to assets from climate events. And a company is required to disclose both quantitative and qualitative information. And IFRS S2, like S1, sets out criteria for when qualitative information only is required, which is when a company cannot separate the effects of a climate-related risk or opportunity from other effects, or, as is sometimes the case, or often the case, there is a high level of measurement uncertainty. And furthermore, a company is not required to provide quantitative information on anticipated financial effects when this is not commensurate with the company's skills, capabilities, and resources, which is an important example of one of our proportionality mechanisms. If you turn to the next slide, I do want to talk a little bit about the proportionality mechanisms here but then also remind you that there is an entire webcast on this. And as you can see here, some of the proportionality mechanisms that apply to this particular requirement include that a company must use all reasonable and supportable information available to the company without undue cost or effort, which means that a company does not need to do an exhaustive search to be able to provide this information. It does need to take into account what is available at the time of the reporting. And second, to use an approach that is commensurate with its available skills, capabilities, and resources, recognizing, as I mentioned before, that some companies that are smaller may have a different approach to disclosing information on this than a larger, more mature reporting company. So I won't go into more detail on that, except for to say that those do exist, and I hope people do take a look at that. If you go to the next page, this is a little bit more about that webinar series that I mentioned, and I will drop a link into the chat right now for people who are interested in, I was talking about the proportionality mechanism webinar, but we do have also a webinar on the concept of current and anticipated financial effects, and that is also very helpful for people to understand what exactly are the expectations and then some of the proportionality mechanisms available. And so I'll put that in the chat later. If we turn to the next page, please. Let's talk about climate resilience. So climate change and the uncertainties associated with that can affect the resilience of a company's strategy and business model. And IFRS S2 therefore requires a company to assess its climate resilience and to disclose information about the implication of climate change for its strategy and business model, and also its financial and operational capacity to adjust or adapt over the short, medium, or long term. Importantly, IFRS S2 does require all companies to use a climate-related scenario analysis to inform their disclosures about resilience to climate change. However, IFRS S2 does not specify which scenarios a company should use in its analysis, but does require a company to use relevant scenarios and provide information about the scenarios that it has selected, and also to provide information about other relevant assumptions it has used in the scenario analysis. These disclosures about which scenario is selected and information about the relevant assumptions that were used enable investors to understand information about a company's resiliency, while also giving the company flexibility to conduct an assessment that is relevant to its particular circumstances. If you turn to the next slide, S2 does contain guidance to ensure the requirement to undertake scenario analysis is proportionate. We did get feedback that people were concerned with that requirement. This includes guidance on how a company is required to determine its approach to scenario analysis used to assess its climate resilience. And here too, we're expecting that a company would use an approach that is commensurate with the company's circumstances, and to use reasonable and supportable information that is available to the company at the reporting date without undue cost or effort. And to determine which approach is commensurate with the company's circumstances, the company can consider both its exposure to climate-related risks and opportunities. In other words, the greater the exposure, the greater the need for a more sophisticated scenario analysis, and also its skills, capabilities, and resources available for the climate-related scenario analysis. In other words, this is not a one-size-fits-all approach. We turn to the next slide just on this point. To support this requirement, the application guidance that was published along with S2 builds on the range of practices outlined in the documents published by the TCFD. For example, the stages of progression to help guide companies on how to select an approach to scenario analysis that is commensurate with their particular circumstances. I will note that this is one piece of educational material that is on its way. So the ISSB will be publishing more guidance on this in the coming weeks and months. If you turn to the next page, I do want to talk about value chain emissions, though I will cut this a little bit short in the interest of time, and also because we will be talking about one aspect of this in a later session. But to support investors' understanding of risks and opportunities throughout the value chain, S2 requires a company to disclose its absolute Scope 1, Scope 2, and Scope 3 greenhouse gas emissions. In other words, the standard requires companies to disclose both their direct and indirect emissions. Most companies are reporting and measuring and reporting their greenhouse gas emissions across their value chain, covering both direct and indirect emissions today. And not most, many companies are. Specifically, IFRS S2 requires companies to disclose absolute greenhouse gas emissions by providing a comprehensive and transparent view of emissions. And to ensure consistency and comparability, S2 mandates the use of the Greenhouse Gas Protocol, including its corporate standard and corporate value chain, which is the Scope 3 accounting and reporting standard. Now, not all companies currently measure their emissions using the Greenhouse Gas Protocol corporate standard. So if a company is using a different measurement method, it is permitted to use that method in its first year of applying the standard. And this is intended to assist companies when starting to use the standards. In case you are interested, at the end of May, we published some new educational material about the requirements in IFRS S2 related to measurement and disclosure of greenhouse gas emissions. And this material is structured as questions and answers about the requirements for an entity to disclose its greenhouse gas emissions in accordance with IFRS S2. If you turn to the next page, we do receive a lot of questions about our requirement around Scope 3. So I do have a few slides on this, though I will skip through a bit in the interest of time. The requirement to disclose Scope 3 greenhouse gas emissions reflects the importance of providing information related to a company's value chain to more fully inform investors' understanding of a company's exposure to transition risk. And this is because for many companies, climate-related risks and opportunities actually occur more often outside the scope of the direct operations. And so a company must consider the 15 categories of Scope 3 greenhouse gas emissions set out in the Greenhouse Gas Protocol Corporate Value Chain Standard, with information being disclosed when material. And I want to give you all a reminder that all disclosures that we require are subject to this assessment of materiality. The 15 categories of Scope 3 greenhouse gas emissions are intended to provide companies with a framework to organize, understand, and report on the diversity of Scope 3 activities within its value chain. However, it is worth highlighting that not all of these topics will be relevant for every company. Or said another way, the categories that a company includes in its Scope 3 greenhouse gas emissions measurement and disclosure depends on that company's facts and circumstances. And so to determine which categories to include in Scope 3 greenhouse gas emissions disclosures, a company must consider its entire value chain, both upstream and downstream. And while a company is required to consider the relevance of all 15 categories, it may find that not all are applicable and thus exclude them from the Scope 3 greenhouse gas emissions disclosures. And the assessment of that information to disclose is subject to materiality. Very quickly on the next page, actually this is related to finance emissions. So I am going to basically skip this because we do have you all have an upcoming webinar on this point. But this is related to investment emissions from investments. And we do have a fair amount of additional content on this that is available for those of you for whom it is relevant, and including some proposed amendments to S2 on this topic, which I will talk about in the next section. If you talk to the next page, go to the next page. Yeah, I think that's right. Yeah. So the feedback on proposed Scope 3 emissions requirement is that information about a company's, that the Scope 3 emissions are important for investors to understand a company's exposure to transition risk associated with its emissions, However, equally, we heard from the market a lot of feedback that indicated that companies were going to face challenges associated with data availability and quality when measuring Scope 3 emissions. And for this reason, we included a number of reliefs and guidance to support companies in the application of the standard. The relief and support includes that the company is not required to disclose Scope 3 emissions in the first year of applying S2. Company can, subject to certain conditions, include information obtained from companies in its value chain with a different reporting cycle to the company's reporting cycle. And of course, that a company must use all reasonable and supportable information available without undue cost or effort. In other words, there is proportionality built into what information is required to use when measuring and estimating greenhouse gas Scope 3 emissions. And then we also have a Scope 3 emission measurement framework that incorporates the use of estimation, assuming that companies will have to use estimates to evaluate this information. And so let me skip to the next slide, which is this measurement framework, which I mentioned, that provides some additional guidance about relevant information to use when measuring Scope 3 greenhouse gas emissions, which, as I said, will often include the use of estimation. As we have discussed already, the standard clarifies that a company is required to use all reasonable and supportable information that is available at the reporting date without undue cost or effort. In other words, in prioritizing information, a company is not required to use undue cost or effort in obtaining that information. And prioritization also implies trade-offs. So it might be, for example, possible to get more specific data that is based on research that is less recent and more recent data that lacks the same level of detail. And so this framework helps lay out some of those considerations. And ultimately, the data that is most appropriate will depend on a company's facts and circumstances, as well as the specific data that a company is considering. Next page, I want to talk about this very briefly as well, because you have another session on this coming up. But as Rose and I have mentioned, industry-specific disclosures are a key part of the IFRS sustainability standards. And S2 does require a company to disclose industry-based metrics that are associated with common business models and activities in a particular industry. And as a reminder, we focus on business-relevant risks and opportunities and material information about those. And as the effects of climate-related risks and opportunities vary significantly by activity or industry, such metrics at the industry level are very important for investor understanding. And so this is built into our S2 as industry-based guidance for people to consider what is relevant to them and their particular business activities. If you turn to the next page, this is finally my last overview slide. IFRS S2 does require a company to disclose the climate-related targets it has set, as well as those it is required to meet by law or regulation, including any greenhouse gas emissions targets. And a company is required to disclose information about the characteristics of each target, how it sets and reviews each target, and its performance against each target. And in disclosing this information, a company is required to disclose how the latest international agreement on climate change, including jurisdictional commitments that arise from that agreement, such as nationally determined contributions or NDCs, has informed the target. And if a company has a greenhouse gas emissions target, the company is required to specify whether the target is a gross emissions target or a net emissions target. And if a company discloses a net emissions target, it is also required to separately disclose its associated emissions target. When a company discloses net emissions target, it is required to include information about any of the carbon credits it intends to use. And then finally, before we move on to questions, I think it's worth noting, if you go to the next page, that we recently closed a consultation on some proposed amendments to IFRS S2. And these targeted amendments are intended to provide reliefs and clarifications related to greenhouse gas emissions disclosures in S2. I won't go over these in great detail, but this is an example of the ISSB listening to market feedback and hearing some challenges with the application of the standards and trying to address them. This consultation did close at the end of June, and the board will begin hearing feedback about that in the coming board meetings. I will say that these are very targeted amendments and were done with the effort to not disrupt companies that were in the process of applying S2 already. So I will go to the next page and I will pause there, and Svetlana, happy to take questions or go to next steps and then take questions, take your guidance on that.
Thank you, Elizabeth. Just a quick question. I see Rose has already answered it online, one question from one of our participants, but it would be great if we can answer so all participants can benefit of translation. And the question is about the scope of IFRS S1 and S2. Are the standards applicable only in respect of listed companies, or other companies can also apply standards? Thank you.
Yes, thank you very much for raising that question for us to discuss. As Rose mentioned in response to the question online, the jurisdictions that are adopting or otherwise using the standards do decide which companies are required to use the standards in their marketplace, and so whether it'll apply to only public companies or other companies as well. That said, there is nothing about the ISSB standards that is solely written for public companies. And in fact, in my prior role, I came from the private markets investing world. And absolutely, private markets or privately held companies also have investors to whom they need to disclose. And so I do encourage people to consider, even if you are not regulated to use the standards because you're publicly traded in one of these markets, to voluntarily apply the standards to communicate to your investors. And as Rose mentioned, we do have a voluntary application guide that I also dropped into the chat for people to see.
Thank you. Now we can move to the next part. Thank you.
I'm talking but muted. Let's go ahead and move to next steps. I want to make sure you all are familiar with some things that are ahead of you and some of the resources that are available. If you turn to the next page, if you're wondering what you can do to get started with using the standards, there are a few suggestions here, including first looking at your existing internal systems and processes to see what information you already have on hand that could be relevant to providing disclosures. And start identifying the gaps and thinking about how to fill those in. Next, to look at your business and think about what sustainability-related risks and opportunities really affect your performance and long-term prospects, because those are the ones that investors want information about. And looking at the governance and structures for identifying your sustainability-related risks and opportunities is also relevant. And finally, to really start to get familiar with the fundamental concepts in S1. As I mentioned a bit earlier, this really introduces the important accounting concepts to sustainability-related information. And of course, while it's not shown on this page, this is very relevant to you all, this audience. If you're operating across multiple jurisdictions, it would also be helpful to review our jurisdictional profiles and snapshots, and of course, more to come as it relates to Europe interoperability or guidance when they complete the omnibus process. And importantly, this number one, reporting processes and controls used for financial reporting on are relevant basis for establishing a lot of important infrastructure within companies. And that's partly because, as you can see on the next page, please, assurability is a key consideration. And as you know by now, hopefully we've said it many times, the main objective of the ISSB is to facilitate the availability of relevant information about sustainability-related risks and opportunities to investors that they can rely on to make investment decisions. And information subject to assurance does increase investor confidence that they can rely on the information to be provided. And to be clear, the ISSB is not responsible for deciding whether reports are subject to assurance in the same way that the IASB does not decide if financial statements are subject to audit. That is a decision made by jurisdictions and regulators. However, to ensure that the information can be relied upon, our standards have been written in a way that supports assurance and verifiability of information. So that's important to know. Now, in the following pages, I will highlight some resources that are available to all of you as you work on implementation. If you go to the next page, with the publication of the standards, the IFRS Foundation also published a number of documents that support the standards and the decisions that the board made in their development, including the ones that you see here. But also, if you turn to the next page, we also had application published with the standards application guidance and accompanying guidance. The application guidance, which is part of S1 and S2 and is considered an integral part of the standard, has the same authority as the rest of the standard. And this includes guidance on supporting preparers in understanding what is meant by sustainability-related risks and opportunities, guidance on identifying what is material information, and then guidance and short examples of what is meant by connected information. And then we also have illustrative guidance and examples that accompany the standards, which illustrate aspects of the standards, but are not intended to provide interpretive guidance. And this includes guidance on meeting the needs of primary users, how to use the SASB Standards, CDSB, framework application guidance, and then also some examples of considering and applying the SASB Standards. Next page, just very quickly, similarly, we have the same kind of guidance supporting the application of S2 that are all publicly available, with more being developed regularly in response to market feedback. And if you turn to the next page, as I mentioned, beyond these types of guidance, we have been thinking carefully about the educational materials and support that we need to provide. We monitor the needs over time and develop materials when necessary to support good application and understanding of the standards. So if you go to the next page, I wanted to show you a few examples of the educational materials. These are some that we published in 2023. If you turn to the next page, one of those educational documents that we published in 2023 reminds companies to consider nature and social aspects of climate-related risks and opportunities when they are preparing climate-related disclosures. And nature aspects might include those related to water or deforestation. Social aspects might include how do you transition employees during a transitioning to a lower carbon economy. And it helps companies apply S2, but does not affect any of the requirements of the standard. If you turn to the next page, this is a snapshot of some of the educational materials that were published in 2024. And if you go to the next slide, you'll see an example of one of those, which is how to use the SASB standards to meet the requirements in IFRS S1. And you all have a webinar on this coming up, but we're also going to be producing some additional educational material on this in the coming weeks. And then finally, in 2025, if you turn to the next slide, we continued to publish more material. All of this is available on our Knowledge Hub, but some of the information examples that we've done recently is the guidance on disclosing about transition plans, which was published in June, not too long ago, which is supposed to help companies that are disclosing on transition plans, think about how to do that. So please do take a look out for that if you are making any disclosures about transition plans. And pretty soon, as I mentioned, we'll have some new material on climate-related scenario analysis, and then also on industry-based guidance using the SASB standards. And then if you turn to the next page, and Rose has also dropped it into the chat, you can find this material on our website, including on the ISSB Knowledge Hub, where we will continue to update with materials and webcasts over time. And with that, I am done with this section and happy to take questions if there are any left. And before we do that, I do want to thank you all again for participating, and to Svetlana, the rest of the World Bank staff, Aurora, and everyone participating.
Thank you very much, Elizabeth. And indeed, we encourage our participants to explore the educational materials and guidance available on IFRS Foundation website. This guidance is very informative and user-friendly, and definitely will help you to better understand the key principles and provisions of sustainability reporting standards. And we have one more question coming back to SMEs dimension. There is a question from Paul. Thank you, Paul, for this question. Do you have any plans to develop a sustainability reporting standards for SMEs in a similar way as we have the IFRS for SMEs? Do you intend to develop a similar standard on sustainability reporting for SMEs? If you can elaborate.
No, thank you for the question. At this point, we do not have any additional plans as it relates to creating another version of the standards. Our number one priority is to support the implementation of S1 and S2. And certainly we are listening to market feedback, as I mentioned, in many different ways. And we'll be thinking about what additional resources, educational materials need to occur. And then as part of our due process at the IFRS Foundation, we do have what's called a post-implementation review, which happens at some point 2 years or so after the standards. And we will be reviewing exactly what is working and what's not. Now, nobody asked me this question, but I'm going to take this opportunity to also say that we are working on a couple of other standard setting or research projects. And one is we do have 2 major research projects underway right now on the themes of 1, biodiversity, ecosystem, and ecosystem services, also known as nature, and 2, on human capital. And in those research projects, we are understanding what are the needs of the capital markets to understand, do we need to create new standards here or not? And so we are going to be probably concluding the second phase of our research in the coming months. This is not a standard setting project. This is a research project that will help us determine whether additional standard setting needs to be done. The other thing that we are very focused on from a standard setting perspective is enhancing our industry-based SASB standards to make sure that they are taking into account the needs of the global capital markets. And we are going to be coming to the market with an exposure draft on proposed enhancements to 9 different industry standards tomorrow. So that's early July. So do look out for that exposure draft as well. And we look forward to the participation of people on this call, including those that consider themselves small and medium-sized enterprises.
Thanks, Elizabeth. And I propose we finalize our discussion with interoperability dimension. As mentioned from the very beginning, this aspect is very important for participants in our region. And one of our participants is asking, wouldn't it be better to have an agreement and unify standard in one set of requirements? You probably answer these questions this question many times. Still, the key difference remains to be impact materiality between European standards and global standards. And maybe you can elaborate on your final thoughts on interoperability aspects. Thank you.
Yeah, I'm happy to give my perspective because Rose certainly addressed this to some extent. There, Rose, of course, feel free to add to this as well. Yeah, you know, the ISSB standards were designed to be what we call this building block approach, which is that we want to make sure that we have a common language for global capital markets. That means that companies are using one set of standards to communicate to investors, therefore providing decision useful comparable information for investors in a way that is also cost effective and efficient for preparers. But we always realized from the very beginning that that would not necessarily achieve all of the needs for sustainability related disclosures, including policy related needs, and also that companies may want to communicate to other stakeholders in addition to their investors. And so the building block approach was intended to be that a jurisdiction could add on top of the ISSB standards to meet their policy objectives, and that companies could add on top of their ISSB related disclosures to communicate to other stakeholders to reduce the complexity. And as Rose described, in the case of Europe, EFRAG came out with their disclosure standard drafts at the same time as the ISSB came out with IFRS S1 and S2. And so rather than being in a position of building on top of the standards, we were in a position of interoperability between those that we designed after the two standards were both finalized. Well, not during the finalization of the standards, and then also after the standards were finalized. And so, you know, it's my hope as a market participant that Europe will take an opportunity as they're going through this simplification process of using the building block approach now, which will enable us to have one single baseline of disclosures, but would also enable Europe to achieve its double materiality goals by adding on top of the ISSB standards. And I think you can do both very well in that process, and also reduce the complexity for people, including people on this call, who are seeking to navigate that. So I think that's ultimately the best outcome from my perspective, and I will leave it there and welcome Rose to add anything if she thinks I left anything out.
No, I think you've outlined it perfectly, and you know, I think the aim is really to try and align as much as possible on the common, you know, the common areas that we have with the ESRS, but while acknowledging that, you know, EFRAG does have additional, well, and the European Union in general has additional goals for its sustainability reporting initiative.
Thank you, Rose. Thank you, Elizabeth. Just let me take this opportunity and inform our participants that we will organize a separate event to cover the provisions of the European sustainability reporting requirements. You will be informed accordingly. With this, I would like to encourage all participants to join me and provide a big round of virtual applauses to Elizabeth and Rose for your great contribution today, for sharing with us your experience, your examples, your expertise. And I would like also to thank Aurora for her great support in organizing this series of webinars. Dear participants, next webinar will take place next Wednesday, and we will explore the sustainability accounting standards for industry-specific disclosures. So please join us. You will receive the connection link and additional additional details by next Wednesday. Of course, thank you to the entire CFRR team for support. Thank you to our interpreters for their great job today, and hope to see you all next Wednesday at the same time. Bye-bye.
Thank you. Bye.